Hey traders, Dick Shaheen here looking at Twilio. Okay, so they reported earnings last night and the stock rocketed higher, which kind of surprised me because it was already at all-time highs, and usually onus is on the management to blow it out of the water. Well, they delivered a strong report, but nothing that says, okay, we're setting the bar, because it did spike a lot. So you can see the reaction. This is, what is this, an hour chart, so every candle is 1 hour, and you can see the exuberance lasted just about that. And then it gave it all up. So where it is right now, from that perspective, makes sense where it's holding. So it went from up big to down 5%, up 5%, I think it was from memory. So let's say a 10-point swing there, percentage points. So a big change of mind. So is it time to go long it or bail? Let's look at that. Okay, so when it was up here, I was talking to other people and I wrote a note about it. So my thought was, great job, surprising you were able to spike, but it's not an obvious point of entry. So if somebody's timeline is forever, then okay, there's no use of sniping a good, perfect entry point, or at least a favorable entry point. So that was not a point to enter. But now, is it? So from the short-term perspective, this is a spot of some support. This is a point of interest for the period of time we're looking at. So this is basically April, end of March through April. This is where both bulls and bears agree on price. And if you can see, we've had just as much action below it as above it as far as distance from, consider it a median of sorts. So it's a point of interest, and therefore it should provide some support on the way down. How strong of a support? Not like a hard line in the sand, but as prices fall through it, it should start to catch it. So this was a heavy volume tick too, so it is considerable. So for more clues, I have to step out. Okay, so but before I do, this was an incredible rally. When was this? From April, just from April. Let's call it. This is an incredible rally, 19% from low to high, twice. So double bottom, boom. And this is eyeball about half of it. So oftentimes they say half back test, so they go up and they test half back and then they rally back up there. So if somebody is thinking that along those lines, fine. But you add to it that the stock market in general is also at all-time highs, and that adds a little risk, because we are likely, the Fed just delivered a good note and the stock market is selling off right here as we're talking, the market's open. So be cautious chasing that. Expanding time frames. So this is a daily chart. So this is what almost everybody watches. All right, so every candle is 1 day, and you can see how it poked before the in the morning, after the headline, whatever, and then now it's giving it back. Again, now you see how this is a center of the action. If I drew a box right here, this is kind of a center line, okay, for that period of time from here to here. But it's not an obvious bottom either, from my opinion. So if I zoom in a little bit just to get more of a where the volume lies, just instinctivly, when I saw the spike, it's like I'd rather be in at 125 at least, because let's mark it up a little bit. I was talking about gold to somebody earlier. It had a breakout going at gold, and then it failed. Okay, so you can see that this right here is a daily area of interest for me, because it was resistance and then it broke out of it and then it tested it for support twice, here and here. So ideally, if it falls towards it, it should be support. Now if this support fails, then they go through it lower, excuse me, and the next zone lower would be this one. So we're talking one level at a time, one level, two levels. So if I were one looking to go long, and if I have to have a macro picture that markets are going higher, or at least not falling, for this to go high, this is not going to rally all by itself. So if the macro is not going up, forget about this one. This is a momentum stock. It runs fast this way and it runs faster that way. So, but if I'm holding the stock and I'm seeing, is this a time to panic? Depends on my entry point, but I'm telling you that there should be support. If this doesn't hold, this is, I should say, this is immediate support where it's at. And then below it, entry point number 1 would be here for somebody that wants to test a midterm trade, and entry point number 2, zone, area. It's not a hard line in the sand. Support level here. So you've got 3 support levels, 1, 2, 3. Depends on time frame. These can be entry points for a trade of sorts. This one probably more of an investment. This is definitely more of a trade. This is a blend between a trade and investment. Now, if I wanted to go, okay, the stock markets are going to correct, this is probably where it's going to find the best support. Now, for the last, I don't know, few months, this right here has been the point of interest where mathematically this is where bulls and bears agree most on price. So this area here would be the best support. So if I'm selling naked puts, I want to be down there, but only if I want to own the shares if it falls through it. So this gives us an idea where Twilio is going to go from a chart. So I haven't talked to fundamentals yet. I don't know the fundamentals. I kind of have an idea, so let's go check them out. All right, so come on, pull. All right, so obviously this is not a cheap stock. Oh my gosh. All right, so I'm looking at these right here. It loses money. Price to sales is 26 times. 26 times. I think, let's compare it. So this is a Momo stock, right? A technology stock. The mother of the cloud is Salesforce. So CRM is the ticker for Salesforce. 9 times. 10 times. So, and this one is expensive. The other one is 4 times more expensive from a price to sales. So you're paying that much for the stock, 26 times as much money as it earns. Not earns, it brings in, top line, not earns, top line. Salesforce is 9 times, let's call it 10 for round numbers. And this is expensive. The price to earnings, the PE, you hear PE, the PE of Salesforce is 110. That's way more than Amazon, which is also expensive. I'm just giving you degrees of expensiveness. You know what Apple is? Like 18. So maybe 18, if not lower. Google is like 26, going from memory, probably cheaper now. Facebook is about there. These are astronomical. So valuation, it's not there. So you're thinking you're catching value? No, you're catching a chart. So from a valuation perspective, this is hideously expensive. Okay, they need to be growing and growing and growing. I remember being stuck in a trade at 25 in Twilio when I had sold a short put and it failed. It fell into 25, probably somewhere back there, right here somewhere. It was an earnings report. It was hideous, but I came out okay because I had protection. So in this case, this is a weekly chart. I would stick to the forget about the valuation because it really doesn't apply. This is more of a technical where is going to be support. So again, right here around 130 is going to be support, 129, 128. 120 is better. That's another pivot point. These are pivots. That's another pivot, a 105-ish. Again, it's ish, rubber band. And the stronger support is below 100, obviously. To be specific, 93 to 87, really. That's would be my guess. All right, so this has been a look at Twilio. If you have any questions, let me know.